Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you're looking for a great way to know what tire sizes are, man, do I have something for you? So I'm excited about this. If you send if you just go to axontiretips.com, go down there, fill out a form, you'll get two, not one, but two, Shawn, resource mouse pads that could let you look at tire sizes and be like, a 520 is a what in inches, boom. Next thing you know, bam, you're back in the game. So next time you need some tire tips, go to axontiretips.com, fill out the form, and you get yourself two, Shawn, count them, mouse pads, one for each office. Okay, boom. All right. Or if you're ambidextrous, you can have one on each side of your computer. That way you can use your right and left at the same time. Look at that. All right. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. This segment of the Moving Iron Podcast is brought to you by Tractor Zoom. With access to over $20 billion worth of heavy equipment sales data, the Tractor Zoom Iron Comps is the industry's trusted solution for transparent heavy equipment values and auctionable pricing insights. So checking out a good place to go see what your stuff's worth, man. Try your go to Tractor Zoom Iron Comps, get that figured out. So Shawn is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the marketplace. So Shawn, how you doing this morning?
I'm doing really good, Casey, and enjoying the day so far. So
that's good, considering that it's 8:30 there. So I guess you've been up for like 8 hours. So
yeah, I've already half my day's already gone already. So
yeah, Shawn gets up early so he can catch the Chinese news reports. So.
The first thing I go to is the Bangladesh news. It's really the first thing I go to. So I gotta be up for that. So
you gotta be ready. It's hot off the press.
Hot off the rice patty.
There you go. All right. Recession talk is something that just can't seem to go away. It looks like they're contributing a lot of stuff to some overnight liquidation because of fears of recession and what that might look like. Shoring up some, short positions, probably what we're seeing out there, and looking at some longs and those kind of things that are getting short up as well. So a lot of that stuff's going on. We're also heading towards the end of the month too. So that's has something to play there as well. But I guess, Shawn, as you're looking at the grain market and this recession talk out there, how much of these movements that we're seeing, because intraday movements are huge, man. One day they're way down, next day they're way up, and you might see end of the day they're only up by 5, but it could have been a 50-cent swing in between each start to close. So I guess, what's your thoughts there?
Look, when prices are high like they are, the market's just looking for an excuse to sell. It's just, so if it's recession talk, they're going to sell because prices are high. We're not dealing with $3 corn anymore. We're dealing with $7, $8 corn. So it doesn't take much to spook people out of these markets. When you have $120 barrel oil, it doesn't take much to get people to want to sell because they kind of feel uncomfortable owning something that's already gone up so much.
Right.
Obviously, with the grains we have, this is the time of the year we typically are under pressure. We've been bearish grains now for quite some time. We, talked about how a late May top, especially for corn, was likely, and the actual top I think was right there in mid-May for the corn market. So none of this is really new. The weather so far has been okay. We had a little bit of a heat scare, but now the models are getting a little cooler into the end of the month, and this is kind of what the market's trying. We have this big report out at the end of next week on the acreage and quarterly grain stocks. And so everyone is just sort of, getting themselves to a spot where they get a little more comfortable. So corrections in late June is actually commonplace for grains, and having recession talk just takes, just accelerates that selling just a little bit more,
Yep. All right. So talk recession here. One of the leading indicators that we see out there that is a economic driver or an economic measuring stick, I guess, is what's happening with cotton. Cotton right now, it's still hovering around that $1.40 a pound area. It's down a little bit today. You've seen some pressure here and there, but really the the response that we're seeing from that obviously is it's down, 18 cents from its high back at the beginning of May. But as you look and kind of go through the cycle of cotton right now, obviously we're going to wait to see what happens with harvest, because we do have a shortage of cotton out there. But I guess as you take a look at cotton, what are your thoughts there?
Well, we've been talking about this for months now. I mean, demand for cotton is going to be down. We had a demand that was coming from China for stockpiling non-child labor cotton, but they've stockpiled it. They've bought it. And now if the end user demand isn't there, they're going to have to work through it. And our price for the first time in a long while has started trading at a premium to the Chinese price, which is a perfect setup for saying that they bought what they needed and are going to back off. We're getting rains in West Texas, which we had, which was one of the big concerns out there. So the crop size is starting to look bigger right now based upon that moisture coming in. So, with all of that, and $1.20, $1.30 December cotton price is extremely attractive and high. So this is what's going on there. And it makes sense that it should go on. Now, obviously, crops not been made, still a lot of the growing season to still go. We still have to get to the hurricane season. So, I don't think grains or cotton, this is the terminal decline, but it's the first shot across the bow, Casey, that supply and demand may be shifting towards more supply and less demand versus what we've been dealing with for almost 2 years now, which was too much demand and not enough supply. So we're getting the first shot across the bow that we're beginning to shift gears. If our weather forecast is correct, beyond a weather scare here in early July, that we're going to have good crops this year, these won't be the lows. We'll see lower prices later on in the summer when the crop is made and the market has determined that crops are going to be good. So
right. Okay. All right. So with all the turbulence that we're seeing over in the outside markets, we got a lot of pressure. Jerome Powell yesterday, Fed chairman, was on Capitol Hill getting grilled by the Senate about asking dumb questions that they should know the answers to. But you would think all the pressure that you saw there, do you see a lot of spillover out of the outside markets coming in and putting money into the markets right now? Or is it just kind of, no, it's so much uncertainty right now that it just no one knows to do with what?
Well, when the Fed comes out and says, we're going to raise rates until inflation comes down, and we don't care if the economy goes into recession, which is essentially what he said. I mean,
he
might have said it more nicely than that, but that's what he said.
Right.
That's a scary. We don't see the Fed say that very often, right? So to the extent that you have short-term hot money that gets spooked by that, they come in and immediately want to sell. Having said that, if the goal is to raise rates until inflation comes down, well, prices are starting to come down. Lumber is down from 1,600 to 500 something.
Yeah.
Copper is down from almost $5 to under $4. Crude oil is down from 120 to 100. So we're starting to see a lot of prices starting to fall. Well, that may mean that we're getting near the end of what they need to do, if that's the reason they're doing it. If they start to see inflation coming down, if we start to see, better inflation numbers in the months ahead, then that could be a bullish sign that they've done what they needed to do. They've been aggressive enough, and they may take a step back. Obviously, we're not quite there yet to see those big inflation numbers coming down, but I think within the next couple of months, we're going to get the first big number that's going to say inflation was way down from what it was the month before. And I think once that happens and people are getting comfortable that we're coming down the inflation mountain, a lot of this stagflation talk, this never-ending inflation that we're going to go in this deep recession, the Fed's going to have to raise rates forever, might start to calm down, and we might start to get a little more balance in the market. And remember, when everyone is worried about something, it's usually already in the market, or almost always mostly in the market. So the fact that everyone now is scared to death about recession, which they should have been worried about 6 months ago, right, says we're probably near the end of the reaction to that in markets. And now, what you need to do now is, what is the talk 6 months from now? I think it's going to be saying much lower inflation than we thought, Fed on hold. That's probably a much more bullish scenario than we're currently trading now. And I think that's where you have to start thinking about, where might be there be opportunities to, if you're a cash buyer of lumber, if you're a cash buyer of copper, some of these very economically sensitive commodities, you should be looking for opportunities to buy physical product when there's blood in the streets and everyone is so fearful. That's when you get your opportunity to buy on a discount, buy something cheap, something that's come off a lot. So that's what I'd be thinking about right now, especially on those economically sensitive commodities like lumber, like copper, even like cotton. If it were to come down considerably further, there's going to be an opportunity in some of these things because the market rarely lets everybody get it right. It's only lets a few people get it right.
Yeah. All right. So I read several articles here. You got the U.S. out here urging countries that that need help with food and fertilizer imports out of Russia and what that looks like. The U.S. is pleading with them. If you need help with this, please do it, because we didn't sanction these things. Those kind of things. You got Turkey investigating claims that Russia stole Ukrainian grain, which I don't know what there's to investigate there. There's plenty of news reports and video of them just hauling truckload after truckload after truckload of grain out of Mariupol and those places in there. So I guess as you looked at, you talked about this earlier, Russia doesn't want to look like the bad guy, but they're sure not trying very hard to let grain come out of Ukraine. So I guess your thoughts on that.
Whatever the grand plan is, Russia's current image is not a concern. So they obviously have an idea of what they want to do, and who knows? I think they have a strategy beyond Ukraine, and I'm not sure we're aware of what that strategy is yet. But there's something going on beyond Ukraine. Ukraine is the first move in the chess match to something bigger, whatever that bigger thing is. And China's involved. It's a complicated situation, but as I try to say to everyone, I try to predict what I can, and I try to manage the risk of what I can't. So I can't predict what Russia is going to do day to day. I can't predict what the news story is going to be day to day. For example, yesterday, there was a news story that Russia bombed another storage area facility or something. And then, so the wheat market, it was up 30 or 40 on that news, and then it ended the day down. Mm-hmm. I can't predict that. And so I just don't try. The overriding theme, I hate to be a broken record, but sometimes that's a good thing. I think at the end of the day, what I believe is going to drive the grain markets beyond sound bites and these short-term fluctuations, which can be severe, is the idea that we're going to have good crops in the U.S. and that Russia is about to harvest a record wheat crop, and they will sell their wheat. And how much wheat they sell that's not theirs, I'm sure they'll do that too. But I don't see a shortage of wheat. I don't see a shortage of wheat, at least in the next 3 months, when we're harvesting and they're harvesting a record crop, and they're going to be selling like crazy to China and others. I don't see any shortage in wheat for the next 3 months. Now, it doesn't mean there won't be a shortage 6 months from now. But, when we're dealing with markets pricing and the pricing of markets and what farmers should be doing and who should be selling and who should be buying, right now, I don't see any supply problem unless the U.S. were to get into trouble. And I don't see that outside of a weather scare, not an actual crop problem. So I think that the onus is that we're heading down on a downtrending market here in grains and in cotton into the harvest lows. Is there going to be some volatility upside? Yes. And I do believe we could have a weather scare in the first half of July that would give us one of those upward volatility opportunities for farmers to get some sales made on a typical, worry over the growing season. But the big picture is, I think we're going to find our way down into some kind of an early harvest low. And then when we get there, then we have to take another look about what the long-term supply demand equation looks like. But for now, I think the trend is down, and I think that's going to be the trend, at least until we get far enough into the end of the growing cycle to where the market prices it all in. So,
right on. Okay, yeah, it's a weird, very weird scenario because there for a while, Russia was thinking, like, had the idea that, we'll get this grain out of Ukraine, let everybody do the thing, and that lasted for about 3 days, and then they went a different direction totally. So interesting story to watch to see how that develops moving forward, because getting ships in and out of there, I don't know. I mean, that's a whole thing right now. So,
well, insuring the ships, who's going to captain it? Who's going to ensure safe travel?
right.
Who's
There's a
going
lot.
to load the ships?
Yeah.
How are you going to ensure they're safe? I mean, I don't know.
A lot of moving parts there.
A lot of moving parts, and you need to have everyone cooperate. What could go wrong? What could go wrong? I don't know. I'm not sure. I'm not sure we're at the point where everyone's really ready to get along just quite yet. I don't think we're quite there yet.
Yeah.
I hope we are, but I don't think so.
Right on. All right, let's talk a little bit on the proteins here for just a little bit. You got obviously this is a big time of the year for barbecuing and those kind of things. So beef demand is going to be high, pork demand is going to be high. As you take a look what's going on there, and then you got the stuff that's happening in Kansas with these cattle kills that they've seen come through. A lot of heat stress on cows out there, so the rate of gain is slowing down, I guess. As you look at that whole picture, Shawn, what are your thoughts there?
We have a battle between recession, like you
Right.
said at the beginning of your show, which never makes people feel comfortable owning the meats, because, when you look at your budget, meats tend to be a higher priced item than, buying, popcorn, for example. Right. So that always brings some sellers into the pits at times. But at the same time, we do have that visceral American tradition of going out in a nice warm sun and grilling a lot of meat. And even in a year where energy prices are high and maybe people aren't going to be driving as much as they did, that means maybe they're going to even do more of that, staying local and doing things locally with that sort of thing. So overall, I think, at least in the cattle business, I think the supplies are going to be so low going forward that even with potentially weaker demand later in the year from a lower economy, I think there's going to be plenty of demand to provide a shortage. In the pork, I'm not so sure. We have to get exports because we produce too much domestically. We don't have enough domestic demand like we do in beef to sop it all up. We were selling a bunch to Mexico. That slowed down, and the Chinese are not ready to buy yet. And so we kind of in this zone where, demand domestically is good, but you have to have those big exports. And I just worry a little bit about the hog market struggling here, finding some of that export demand it needs to get rid of this excess supply, whereas the cattle business doesn't really need those exports. It's more additive. In fact, the exports for beef have been surprisingly strong. So I guess I'm kind of constructive, but I'm much more constructive on the cattle market. I'm going to be much more constructive on the hog market in the fall going forward, because I think that's where China needs to come in and restock, because their hog prices is now rising. I believe the herd liquidation from the second round of ASF is over. And I think that as they slowly reopen, as I believe they will by the fall, they're going to need to buy some pork from the US. And I think that would be a more dynamic or interesting time to look for big purchases from China to re-excite the hog market. In the meantime, it could be kind of a big volatile trading range until we get there for hogs.
Right on. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information in our weather cycles, our capital flow cycles, to let people know what we do and see if we could be of service to your listeners.
Right on. And speaking of weather cycles, Shawn and I are going to do a special podcast, kind of an update on the weather cycles and natural climate changes that Shawn's talked about quite extensively here on the podcast. It's been probably 6 months or so since we've really done one of those. And as we head through this La Nina to El Nino, or sorry, other way around, El Nino to La Nina change and how that flows into this fall and what that looks like. This is one of those impactful moments that you've talked about quite a bit moving into that September, October timeframe.
We're also going to talk a little longer term because it's a pretty important event. We talked about this in our podcast yesterday that we sent out to our subscribers of something called the Gleisberg cycle. Don't want to spend a whole time going over exactly what that is, other than there tends that it's an 85 to 90 year cycle that has historically been associated with 1 in 100 year Midwest droughts. It came into the last time that cycle came into play was 1934, 1935. And now the next cycle is coming into 2024, 2025. So there's a pretty interesting cycle that says we could be entering, one of these rare drought cycles that you see, one shot out of 100, you get one of these really nasty ones. And we'll go over what the cycle is, what's the basis behind it, what the history is behind it, and why this period coming up for El Nino that's going to be bearish for grains, into next year could be a tremendous opportunity for livestock producers to load up on cheap feed ahead of what could be a wild kind of a situation with weather. And so that and more, but I think, those that have an interest in long-term weather patterns and what it may mean, might find this discussion about the Gleisberg cycle, pretty interesting. So,
right, I'm looking forward to that. So listen for that. We're going to record it tomorrow. Today is Thursday, the 23rd. Hopefully you have it recorded on 24th, and I'll have it out this weekend for everyone to listen to. So, Shawn, one more time before folks can reach you at over there, Hackett Financial.
Website is Hackett, HACKETT, advisors with an S, .com.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. You can also find those same podcasts on LinkedIn at Moving Iron Podcast and the video version of it on YouTube. So if you're interested in checking that out, go see that. If you want to see everything Moving Iron related, go to MovingIronLLC.com and you'll get all the latest editions of the Moving Iron Podcast blog posts, as well as all the information for the upcoming Moving Iron Summit in Nashville, Tennessee, September 6th, 7th, and 8th. That's open to any dealer, new, used, or otherwise, doesn't matter. If you want to come check that out, network with people and learn, talk about used equipment and sales processes and those kind of things, all that exciting stuff out there. If you're interested in doing that, hit me up at Moving Iron Podcast at MovingIronPodcast.com, and I'll get you more information, or you can just fill out the form there online and you'll get registered and you'll be ready to go. So looking forward to seeing everybody coming up here in September. So with that, I'm Casey Seymour with Shawn Hackett. On one more thing, I forgot about my buddy Alex. Alex is over in Ukraine right now, and he's just talking to me this morning before I got on with Shawn, and going back and forth about what's going on. He was at a checkpoint, and he was about he said he was about 10 miles away from the front line there, and he's getting stuff moved around, and he's so far everything's gone well for him. We're organizing the time to where he can give us an update on what he's seeing over there on the podcast here. So interested in helping Alex. He's got a GoFundMe page set up. Go to GoFundMe.com, search Alex for Alex's page there. It's help Alex move humanitarian aid. Help Alex transport humanitarian aid from Poland to Ukraine, and help there. You can whatever you want to throw his way would be greatly appreciated. He's over there, cashed in his chips, and he's just out there helping his countrymen. So if you can help Alex out, that'd be great. So with that, I'm Casey Seymour with Shawn Hackett. Let's go smart, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here.